Welcome to today's pre-market video, which is dealing with Bank of Japan. The before and the after, what it means, and it's as well echoing Trump's statements made in Davos, what it means for yields, the dollar, and what kind of clues can be gleaned from the markets. You know pretty well what I do on the side for clients for so many years already. Thank you for subscribing to this channel and liking this video, it helps greatly, and looking forward for talking with you either on Twitter or on Telegram. Let's start as always with yields, because this is pretty much the most important chart. You remember my call at the beginning of the week that I do not see too much room for yields to decline, and conversely that I expect treasury sellers to return with force. And that kind of corresponds with what we had seen yesterday in equities, where I had been still bullish and calling for a very soon reversal to the upside of the shallow ES 6100 support level, the first serious support to pay attention to. As for Bank of Japan and what their policy move had been, this was no stunner, but what had been quite a few advanced clues had been already visible in yields rising. Compare that with what I had discussed on Tuesday in the yields video. I will be linking to this within this presentation so that you can review it thereafter once you finish watching this one, because in this one I will be covering all asset classes from precious metals to equities to oil, and I will be mentioning as well the continued crypto consolidation, and what I'm seeing is a bit of underperformance building in MicroStrategy. Sticking with yields, we see an upswing, their ascent. The same for US dollar, which had not been selling off heading into Bank of Japan policy statement and policy moves. These are very important clues. The third important one, which I had seen as materializing already, was strong performance of industrials and as well multinationals, which I had as well discussed on Tuesday's video, had not been sold off at the very end of the session. So we had seen quite some bullish positioning, bullish as in Bank of Japan is going to be turning into a no event, and let me just add that the same is going to be true next week about the Fed. And this environment is that conducive to risk taking, and the ascent in yields is that tame and that well behaved, that even home builders and real estate are getting second thoughts and not plunging further. There is as well some kind of a corresponding move in Russell 2000. But let's get into this US dollar, and let's first of all explain today's pre-market long red candle. The culprit is not Japanese yen. There is no reason to worry, especially remembering Trump's call for yields to be lowered, yields to retreat, rates to be lowered worldwide. The same as regards oil prices, that he would like to see them drop. We had seen quite a few 600 billion commitment from Saudi Arabia about investment in the States, which is all pointing in one direction, and that direction is risk-taking, because the culprit of this US dollar descent pre-market is the rise in euro and not the rise in Japanese yen. Japanese yen is very well behaved, and having been preceded by Trump's call for yields to retreat worldwide, Bank of Japan did not stun the markets the way they did in early August. So we had seen quite a continuation in risk-taking, and this view of S&P 500 market breadth is confirming it likewise. We had seen the one that is turning up out of the two black lines is the equal weighted one, which is very, very good. And the Nasdaq one is lagging, however, multinationals are seeing a late bid. So where does it leave us with S&P 500 and the pattern of daily candle? We are going to be seeing some continued price action in the upper half of yesterday's long white candle, which means I'm not looking for any kind of a downside stunner hitting during the US market hours today. You remember yesterday's video where I showed you this breadth chart of S&P 500, and I was talking about it being actually primed to rebound very shortly, and I gave it maximum at the very worst 2 trading days to rebound, and we had seen already on the first one return to healthy breadth broadening, which is quite apparent from this chart. Looking at the sectors, there is a distinct defensive slant to it, with healthcare, real estate and utilities doing well, but financials, they are surging. Wood, Interactive Brokers, JP Morgan, Goldman Sachs, you name it, the biggest banks and those that are betting on for now still reasonably behaved yields, because the path through 5% will take some time. We had seen quite nice broadening of breadth into cyclicals, and I really like the strong showing in industrials, especially that. So much for market breadth and sectoral view, which is laying the groundwork for sideways to up session today, and that is characterized by downside rejection coming first, which had been my call for gold, and see this daily candle, it happened precisely exactly, and silver likewise underperformed, which was another part of my daily precious metals call. Today we are going to be seeing a reasonably fine session in the yellow metal. It's grinding higher and the up leg is well underway and established. That has been part of my longer term outlook, medium term, let's say. As regards oil, I called for not way too much dilly-dallying at the 76 support level, and we had been heading down. Now around the 200-day moving average there will be a little pit stop, but I expect oil prices to decline, because I had already mentioned Saudi Arabia. This is a hint at all of OPEC. We are going to be seeing not constrained supply. Drill baby drill is very well known policy, and this will work to bring down oil prices medium term, so there is no reason to be swinging oil bullishly here. My join page to help you select what's the best product for you, so that you are in the picture based on what and how you trade. Forget not about liking this video and subscribing to the channel, and let's talk some more on Twitter with the disclaimer to finish it off, and have a great weekend in advance.